India's factories are still in the woods. Core sector growth contracts for the second straight month in April, but hope is in the air. The HSBC Purchasing Managers Index for manufacturing hits a 4-month high in May. Auto sales continue to struggle as rural demand weakens further.
Economists and brokerages scoff at the GDP data and raise the red flag, say the decline in gross value addition growth and government consumption does not bode well for FY16. The street is divided on the prospects of 8% growth this fiscal.
We expect 25 basis points, though I personally feel it is time that we reduce straight 50 basis points.
Market is going with at least a 25 bips cut.
This is a very close call. Perhaps there's a 25 basis points rate cut tomorrow.
The rate cut chorus gets louder a day ahead of the RBI's credit policy. 70% expect the Reserve Bank to hand out a 25 basis point cut. That's according to a CNBC TV 18 poll.
Some respite for Nestlé's Maggi. The food regulators in Maharashtra and Karnataka do not find abnormal levels of lead in the initial test of the instant noodles. Await results of second round of tests. That's an exclusive.
The ITDC stock hits an upper circuit as the government firms up its plans to sell stake in 8 of the 16 hotels. Tourism Minister promises a transparent stake sale, refuses to put Delhi's Ashoka Hotel on the block. In an exclusive conversation with CNBC TV 18 reveals the details.
The Aviation Ministry sings two different tunes. Minister of State Mahesh Sharma reiterates the centre's intent to regulate airfares. This after reports suggested Aviation Minister Gajpati Raju is against the move.
Pioneer and Reliance Industries sell their entire stake in a shale gas pipeline company in the U.S. Enterprise Partners buys Eagle Ford Mainstream. Both companies mop up over $1 billion each.
Drama, the special court hearing the coal scam charge sheet against Naveen Jindal, Madhu Koda and others. The judge accuses lawyer of an accused trying to influence him, warns of strict action but refuses to reveal names.
Crucial developments in Tamil Nadu. The Karnataka government moves the Supreme Court against Chief Minister Jayalalitha's acquittal, and the heavy industries in the state will now be spared from the crippling power outages.
The government's new emission norms only adds fuel to the raging debate on pollution control in Delhi. A special report coming up.
Taking strike, I wasn't scoring runs. I came up and told him, Sach, can you take strike? I'm just struggling just to change the luck, 2 or 3 games. He said, no, I never done that, you do it. So I said, fine, I'll do it. I was captain then. I was the only captain. I was the only captain who had to ask from my players, can I do this?
I'm struggling, honestly. I only discovered later that I had fractured my rib. And I'm recovering. And Tata Singh, tu champion hai, tu champion. I said, I can't talk.
They've carried Indian cricket on their shoulders for decades. 1 million hearts stopped right in the middle of the tracks when they walked out to the cricket pitch, and now they're back. The BCCI turned to legends Sachin Tendulkar, Saurav Ganguly and VVS Lakshman to advise the board on all cricketing matters. Shireen, I could go on and on and on, but I know we've got a news-packed show.
Well, thank you, Nentara, very much for your generosity and benevolence. But, you know, we showed that shot there, the man that I was missing, and I'm heartbroken that he's not there, Rahul Dravid. But maybe they will include him at some point. That's all the cricket chatter for now. Let's get straight down to business. Let's kick things off with the day's trading action today. With the Reserve Bank's credit policy tomorrow, investors choosing to play safe on the Lal Street. A range-bound session saw major indices ending the day flat. The Nifty ended barely in the red. In fact, it was down by just about 1/4 point. The Sensex gained about 20 points and continues to remain within a striking distance of the 28,000 mark. Ditto for the mid-caps. That index also ended the day flat, so it was caution ahead of the RBI's credit policy tomorrow. But here's the big story tonight. If last Friday's GDP data was confusing, today's core sector and purchasing managers index has only worsened the confusion. Core sectors show that the Indian economy is actually weakened in certain areas in the month of April. But then if you look at the purchasing managers index, it shows the economy has generally done better in the month of May. To alleviate the confusion, we're now joined by Lata. Lata, how should we read both these data points?
Well, the core sector data is genuinely a little depressing. Remember, this is for the month of April. It's a contraction of 0.4% for the entire core sector. And mind you, this is 38% of Indian industry, 38% of IIP. And the worst culprit is electricity, which is 10% of IIP and 1/3 of core sector itself. That has contracted by 1.1%. Bad number because electricity used to grow in double digits from practically all of 2014. And hence this contraction is extremely disturbing. Among other sectors that have done badly are cement, which has again contracted. You know, pre-monsoon, normally cement should do well. It's a contraction of 2.4%. Crude oil, refinery products, gas, fertilizers, all of them have contracted. Now, what was the good news? Steel. After contracting by 4.4% in March and in Feb, that has recovered to 0.6%. So at least the contraction has stopped. That's because basically the rupee depreciated and global steel prices inched up a little. So there was not so much competition from global steel. And the other positive story really is coal. Coal output has grown by 7.9%. So now it is very clear that power sector is not affected by supply issues of fuel, but it is affected more because there is no demand for the power that is generated, which is why power output seems to be falling. But if the core sector is giving you a very dismal picture that probably the IIP and the GDP in the first month is not going to be very good, what is dulling this bad picture is the very good PMI number that we got. Purchasing Managers Index. An index released by HSBC Market Economics. It's a private collector, not like core sector, which is a government statistic. This is private data, and it doesn't have as much of a sample as government data has. But nevertheless, it is giving us good news. It says that the PMI index has risen to 52.6 in May from 51.3 in April. And more importantly, it is the highest since January that this index is. Any reading above 50 means growth, and for 19 consecutive months the index has remained above 50, which means at least we are not contracting. New orders have risen, which is always very good, and the sharpest rise have been in consumer goods and fairly decent rise even in capital and intermediate goods. Foreign demand has also improved, though not as much as it improved in April. Input prices have risen in some categories, which might affect margins, but the only bad news from the PMI data is nobody has employed more people. Practically none of the managers who have responded to this data collection said that they increased staffing because they're uncertain about whether the good demand will continue. Nevertheless, if you read this data along with some good data in the auto sales, it looks like the growth picture is not as bleak as the core sector makes it out to be.
Thanks, Lata, for joining us. With that, so you have the core sector data as well as the HSBC PMI data come out earlier in the day. Now, post the GDP number 7.3% for last year and today's PMI and core sector data, what are economists saying about the growth prospects this year? Manasvi Girani finds that economists are deeply divided. Half of them see growth improving to 8% this year. The other half see a repeat of a 7.5% tally. Here's that report.
India's fourth quarter GDP at 7.5%, up from 6.6% in the third quarter, has not had economists jumping with joy. Most are cribbing that the data point that really stands out is the gross value added, GVA growth, that came in at only 6.1% in the fourth quarter, down from 6.6% in the third quarter. These economists say that GVA is a better indicator to assess country's performance, as GDP is GVA plus taxes. And in the fourth quarter, GDP at 7.5% was much higher than GVA, only because the government upped taxes on few products. Brokerages believe that real activity, or GVA, actually slowed on account of poor agricultural output that contracted by 1.4% on a year-on-year basis. Also, large squeeze in government consumption by 7.9% to meet the fiscal deficit target saw just a 0.1% growth in public services like education and health. Agriculture may continue to disappoint this year as well, and if divestment is not successful, government may cut spending again.
We don't expect any great increment coming from agriculture sector because it looks like the monsoon outlook for this year is also quite clouded. So even if the overall rainfall is close to normal, the distribution could be skewed. I would still point out that there is a huge divestment target which the government has, and suppose they're not able to achieve it, perhaps that pattern could get repeated this year also.
Besides agri and government spending, Poor global demand may also hurt exports and hence India's GDP, say several economists. But not all brokerages are pessimistic. In fact, there is a clean split. Brokerages like Nomura, Edelweiss and CARE expect an 8% GDP growth, while JP Morgan, Bank of America Merrill Lynch and Macquarie expect growth to be more like 7.5%. In Mumbai, Manasvi Gilani.
Well, the devil is in the detail now. In this backdrop, the Reserve Bank will announce its credit policy tomorrow, and just like it has for the last few months, hope that Governor Rajan will cut rates has resurfaced. 70% of the bankers, bond dealers and economists polled by CNBC TV 18 say that they're certain the governor will not disappoint. Manasvi Gilani and Ritu Singh bring you the highlights of the CNBC TV 18 credit policy poll.
Retail inflation has eased to a 4-month low of 4.87%. And industrial output is slowing to a 2.1%. In this scenario, bankers, bond dealers and economists believe a rate cut from the Reserve Bank of India may be just what the doctor ordered. 70% of the economists and financial experts polled by CNBC TV 18 expect the governor to cut repo rates by 25 basis points on the 2nd of June. This confidence is bolstered by the fact that he passed on cutting rates in the April policy. However, not a single person believes that a 50 basis point rate cut could be in the offing. Expectations are also pretty uniform when it comes to RBI action on other policy parameters. 95% do not expect any change in the cash reserve ratio, while just 15% expect Rajan to cut SLR by 25 basis points to 21.25%. This unanimity dwindles somewhat when it comes to picking the quantum of rate cuts one can expect over the rest of 2015. 60% of the respondents say 50 basis points, while 35% say 25 basis points, and the remaining 5% say 75 basis points. And then there's the question on how Governor Rajan sees the India story unfolding over the course of the year. 90% of our respondents do not expect him to change his outlook on GDP growth from his current 7.8%. However, 20% believe he will lower his estimates on retail inflation to between 5.5% to 5.7% from the current 5.8%, while 10% think he may go further to somewhere between 5 to 5.5%. 75% of the experts we spoke to expect the governor's stance to remain neutral, though his views on the rupee movement, the recent rise in US bond yields, the timing and quantum of rate hikes by the US Federal Reserve, and the quality of government action to ease supply-side constraints will be the key areas to focus on in the 2nd June policy. In Mumbai with Manasvi Gilani, Ritu Singh.
And we will know what the governor decides at 11 a.m. tomorrow. That was our credit policy poll, but what are economists, market experts and India Inc. expecting from Governor Rajan tomorrow? Here are some influential voices.
I'm very clear in my head. Market is going with at least a 25 bips cut. If that didn't happen, it will be bad. At least in the short term, it will be bad. 50 bips, if it happens, it will be a positive surprise.
I had said, considering the inflation, which is quite a bit under control, and push towards growth, it is time that the interest rates are brought down up to 1%. That's what I had said, if any one of you remember that. Of which so far 50 basis points have been reduced, and 50 are left. Immediately in the coming announcement or a coming policy and this thing, we expect 25 basis points. Though I personally feel it is time that we reduce state 50 basis points. Reserve Bank Governor may be overcautious and he might reduce only 25.
My guess is that the RBI will be doing the same arithmetic that we are doing, that much of the 7.5% first quarter growth rate came because indirect taxes rose very sharply because of the excise duties that were imposed on diesel and petroleum products, and because at the same time subsidies fell because of the decline in oil prices. So I'm guessing that they are going to look at the other underlying variables, and that would still suggest that the economy isn't completely out of the woods. And my sense, therefore, is that perhaps, again, there's a very close call, perhaps there's a 25 basis points rate cut tomorrow. But even if there is a 25 basis points rate cut, my sense is that that will probably be the beginning of a very long pause.
Well, that's opinion there. Most on the street believe that a 25 basis point cut is what the Reserve Bank governor will announce. Will there be other measures as well, including perhaps a CRR or an SLR cut? There isn't too much hope of that happening. Now, the auto sector may not be out of the woods just yet, though individual companies like Maruti and Ashok Leyland have shifted into high gear. In fact, it's the rural demand that seems to be hurting the industry, with tractor manufacturers like M&M and Escorts feeling the pinch in the month of May. Alexander Matthews standing by with a complete breakup of the sales figures. Alex, break up the numbers for us, and it seems very clear from the sales data that there is a distinct urban-rural divide.
That's right, Shireen. I'd start with the good news first. In the passenger vehicle space, the clear outperformer was Maruti Suzuki. Its sales were up 14% for the month, led primarily by the sales of its Alto, WagonR and Ciaz. For Tata Motors, new launches were the way to go. The Bolt, Zest and Nano Gen X paved the way for a 21% increase in auto sales. However, utility vehicles were a disappointment, not just for them, but also for M&M, whose total sales fell 3% during the month. M&M's utility vehicle sales fell 5%, and that will be a cause for concern for the company because its market share in the segment is getting eroded. In the two-wheeler space, the urban-rural divide is clearly seen. While Royal Enfield continued to outperform, sales of Honda motorcycle and Hero MotoCorp reflected the concern on rural demand. Honda's domestic motorcycle sales fell 9.5% and Hero's total sales fell 5.4%. And that brings us to the lead indicator of rural demand, that is tractor sales, which clearly was the worst affected. M&M's total sales in the segment fell 20%, while Escorts registered a 16.4% decline. Lastly, the commercial vehicle sector continued to improve. Ashok Leyland's total sales rose 40%, led by a 37% increase in its light commercial vehicle sales. Tata Motors registered an increase of 17% in the M&HCV sales, but they were let down to a certain extent by the LCV sales, which have not yet picked up. With that, it's back to you.
Thanks a lot, Alex, for joining us with all of those details. Motown clearly not out of the woods just yet. And here's a big corporate story in what could be a potential relief for Nestle. Sources say the initial testing by state food and drug administrators have shown no abnormal levels of lead in Maggi. State FDAs, however, are being cautious. Priya Shetty was the first to break that story, now joins us live. Priya, how should we read this as a clean chit being given to the company?
Well, owing to the sensitivity of the Maggi issue, state food and drug administrators are very cautious before publishing final results of the Maggi samples. We learned that the food regulators in states like Maharashtra and Karnataka have given Maggi samples for re-verification so that they're completely sure before publishing the final results. Sources tell us that the initial samples tested in FDA's local laboratories in Maharashtra have found no abnormal levels of lead in Maggi. And to be doubly sure on this issue, we learned that the Maharashtra FDA has given samples for testing in its Pune laboratory. Similarly, Karnataka FDA, which had found no aberration in Maggi tests conducted in March 2015, have now given samples for testing in their Bengaluru lab. Delhi FDA is also waiting results of the samples that it had given for testing. In fact, these incremental developments could be a positive for Nestle, which could find itself battling it out with the Lucknow FSDA in court. FDA sources meanwhile tell CNBC TV 18 that the batch tested by the Lucknow FSDA was a 2014 batch and that high levels of lead could have perhaps been a one-batch phenomenon. In a statement to the exchanges, Nestle has said that it has conducted extensive testing of nearly 12.5 crore Maggi packets, and the results show that there is no excess lead in the noodles. Back to you.
All right, Priya, thanks very much. So preliminary tests conducted by the Maharashtra and the Karnataka FDA show that there is no abnormal lead content, but we are awaiting those final reports, and perhaps we could hear from the Maharashtra FDA over the next 24 hours. Now, this controversy surrounding Maggi is bringing flack for its brand ambassadors like Amitabh Bachchan and Madhuri Dixit. Speaking to Network 18, Bachchan said he was assured by Nestle that their product is just fine.
I did check with Nestle, who were making the product, whether this was all right. They ensured that yes, this is absolutely fine. I even put a clause in my contract where I said that I hope you're going to defend me legally in case there are some legal issues. Celebrity status and presence, the product will sell greater. In a sense, she becomes liable. In a sense, I become liable. Or in a sense, every celebrity becomes liable. And it happens everywhere.
And that's the big B there on the Maggie controversy. Remember, government agencies suggesting that brand ambassadors like Amitabh Bachchan and Madhuri Dixit should also be held liable if indeed the Nestle complaint is proven to be true. Now, the Ministry of Tourism and Culture has already begun the process of selling the government stake in 8 of the 16 hotels under the ITDC. But one of the worst performers among all of the properties, that's the Ashoka Hotel at Delhi, is not on the disinvestment list in the first phase. The Minister for Culture and Tourism, Mahesh Sharma, in an exclusive conversation with CNBC TV18 says the government will ensure the disinvestment happens without any controversies, unlike the previous NDA regime's sale of hotels. Take a look.
The government is pressing ahead with hiving off loss-making hotels under the ITDC. In an exclusive interview to CNBC TV18, Sharma says ITDC properties in Jammu and Kashmir, Guwahati, Bhubaneswar and Puri will be on the block, and the process of disinvestment has already begun. Besides 2 Centaur hotels, part of Hotel Corporation of India under Air India at Delhi and Srinagar will also be on the disinvestment list.
In principle, we have taken a decision. Out of 16 hotels, 8 hotels we feel that it needs to be looked with a different perspective in any of the 3 modes, and shortly we will take a decision of disinvestment of these hotels.
The disinvestment process would be open to Indian as well as foreign bidders, and Sharma is looking at a mix of outright sale and long lease to attract investors. Sharma refused to comment on how much money the government is looking to raise through the sale.
We have made up our mind for a particular value, but definitely that value cannot be released now. It will be a secret document. Once we come on, make it online. It will be a total online process and it will be totally transparent process. Making any figure declared now will not be justified.
The previous NDA regime's disinvestment of hotel properties was mired in controversy. As recently as 2014, the CBI registered a preliminary inquiry into the sale of Udaipur Lakshmi Vilas Hotel to Bharat Hotels during the NDA regime in 2002. The sale of the Centaur Hotel in the same year in Mumbai also ran into trouble. The hotel was sold for 83 crore rupees to Batra Hospitality, which then sold it for 115 crore rupees just 4 months later. Sharma says the process of disinvestment in ITDC hotels will be transparent.
Last 1 year, whatever the processes has been done, there has been not even a single finger raised on any of the, whether it's a coal block auction, whether it's a spectrum auction, 2G spectrum auction. We want to make it so transparent, and it will be open to everybody, domestic as well as international players also.
As per the ITDC website, the corporation presently has a network of 8 Ashok Group of hotels, 5 joint venture hotels, 1 restaurant, 11 transport units and 9 duty-free shops. Besides, ITDC is also managing a hotel at Bharatpur and a restaurant at Kosi on behalf of the Department of Tourism. ITDC declared an operational profit in FY15 at 5.22 crores versus an operational loss of 18.65 crore in FY14. Profit before tax for FY15 stands at 38.95 crore against 11.93 crore in FY14. But the minister has made it clear that one of the worst performers among all ITDC properties, Ashoka Hotel at Delhi, is not on the disinvestment list in the first phase.
Both Delhi and Samrat, but definitely we take it as a challenge that within 6 months time down the line, we'll make these 2 hotels in a profitable manner, we assure you.
Sharma also made it clear that the brand name Ashoka will remain with the government, so in some cases of disinvestment, there may actually be joint ventures formed with private parties. In fact, of the 16 hotels under ITDC, any hotel which is borderline or making a profit will not be up for sale. In New Delhi with Sindhu Bhattacharya, this is Shireen Bhan.
And the ITDC stock hit the 20% upper circuit today after the tourism minister confirmed the news of the government stake divestment. That's the ITDC stock for you. Now, India is moving ahead to put in place some sort of airfare regulation. In an exclusive interview to CNBC TV18, the Minister of State for Civil Aviation, Mahesh Sharma, who also doubles up as the Minister of State for Tourism, said he will call airline representatives for a meeting within the next 2 weeks to discuss a mechanism to regulate airfares. Take a look.
We cannot permit airlines to have predating price. We have our social infrastructure. Maybe somebody has got a school going exam, exam interviews or anywhere, somewhere, or somebody has got a family crisis, health related or otherwise. So I think this social issues also needs to be addressed, and we cannot permit the predating prices.
So is it fair to say that some sort of regulation is being worked out?
I'm sure very shortly I'm going to meet within a week's to 2 weeks time with all the airlines operators also and find out a solution for that.
The Minister of State for Civil Aviation reiterating his government's attempts to regulate airfares. This is in variance with Civil Aviation Minister A. Gajapati Raju's position. As per reports, Raju just last week is led to have said that there was no rationale for regulating fares and that the current mechanism of airlines declaring their maximum and minimum fares to the regulator was transparent. Sharma also dismissed concerns of airlines battling high taxes and this being an added burden.
We'll watch their interest also, because civil aviation industry is also facing a crisis nowadays. But definitely, we have to see the social infrastructure angle also. That also issue we have to address. It's our moral duty to do that.
A tariff monitoring unit has been set up within the DGCA to watch fares selected on a random basis. Since late last year, there have been contrary views within the Ministry of Civil Aviation over fare regulation. In an earlier internal note circulated within the ministry, there was a proposal to cap maximum fare any airline can charge on any domestic route at 20,000 rupees. This proposal had said that the minimum fare will depend on break-even cost of each airline and that the IRA Act may be amended to include airlines and therefore fare regulation by the ministry. As of now, only airport tariffs are regulated via IRA. In New Delhi with Sindhu Bhattacharya, this is Shireen Khan.
So if we do see an upper cap, consumers will be happy, airlines clearly won't. Here are the other business headlines that we're tracking today. It's not just petrol and diesel that's getting more expensive. Aviation turbine fuel, or ATF, and LPG cylinders have just gotten more expensive from today. Oil marketing companies have hiked ATF prices by 7.5%, while a non-subsidized LPG cylinder price has been hiked by 10 rupee 50 paise for every cylinder.
Well, Reliance Industries has decided to sell its 49.9% stake in a U.S. joint venture for over $1 billion. This JV owns a pipeline network for the transportation of shale oil as well as gas. Netha, what does this mean now for Reliance?
So it was in 2010 that we'd actually seen the setting up of this joint venture. It has 460 miles of pipeline for transporting shale gas as well as a condensate that is produced both by Reliance Industries and Pioneer in another joint venture company. Reliance Industries has been looking to sell some of its shale gas assets in the United States. In fact, like I was talking to you about that other joint venture it holds with Pioneer, we understand that is also on the block, and Citi and Bank of America Merrill Lynch have been roped in for that. Now I talk about the deal that has been announced today. Enterprise Inc., listed in New York Stock Exchange, has announced is going to buy out both Pioneer and Reliance Industries in a deal of $2.15 billion. It's a two-step deal. In the first half, you will see the companies being paid $1.15 billion, and within a year of closure, it will be paying the rest, which is about $1 billion. But like I said, perhaps you're going to see other deals also being announced. And Shireen, a standard disclaimer, Reliance Industries owns Network 18 and the channel that you're watching right now, CNBC TV 18.
Well, absolutely. Let's move on now for time for us to take a break. But there was some relief from the scorching heat here in the national capital. Delhi saw some pre-monsoon showers this evening. The Met Department has said that the monsoon will reach Kerala by the 5th this month. So the rains finally here, or so it seems. Our fingers are crossed.